Principles of finance, a la shmup. Drones. Yep, that's still you. You've been hunting for LBO targets now for months and months and months. Whole lot of nothing. Lots of false starts, many that died in the first hour of research, and a few where a competitor firm beat you to the punch and bought them. But thus far, for your fat salary plus notional bonus, well, you are in pain, realizing that you've contributed absolutely nothing of tangible financial value to the firm. Nothing has materialized, and you start to add up the very high cost to the firm of having you basically just surf around the web reading stuff. Your salary and benefits cost them almost 25 grand a month. All told, in the last 6 months, well, you've cost the firm almost 150 grand by your reckoning and given them nothing back. And you're wondering what private equity washouts do for a living after they wash out. So when the day comes around and door number 3 opens, you're in full contact focus. Like a light through a Capulet window doth break, the ticker BRND hits your screen. You didn't need all that college to immediately recognize that it's a totally cool company. They make basically 2 flavors of drones, big and little. Your neighbor even has one. You remember him explaining the crack in his shower glass as having come from flying one of the nano drones inside the house. Well, the little drone company was a bolt-on acquisition of the much larger one at the time. Blade Runner bought Nano Drone. The combined company had great times and then fell on very hard times. Something bad clearly happened to their business, as the chart line on the stock thing looks like, everything suddenly fell off a cliff here on a dark mid-January day sometime a few years ago. You wonder how this stock didn't make your radar in the past, but well, you can see why. It traded at a massive $15 billion market cap at one point in its career, and then it slowly, steadily declined. Well, that's pretty much Tiger peaking in 08, and that's where it ended up. Yeah. And it only hit your maximum $2 billion price point this week because, well, the overall market has been edging downward, and the stock was just recently pulled below that floor by the overall market trading down. From having held a market valuation of $2.2 billion for about 6 months as of last month, and well, now with the overall market weakness, it's traded down to a market valuation of $1.8 billion. Anyway, you wonder, maybe this is a company that in fact not everybody in my field has yet looked at. You dig up an old sell-side brokerage report and you find a spreadsheet on the company buried in the appendix, which nobody reads anymore. You note that the analyst is a washed-up dinosaur from the buy side, actually, who used to be somebody, in quotes. And you remember having these dinosaurs teach you in business school, noting that they forgot more than you'll likely ever know about your industry. They were just hit by a stock meteor unluckily one day, or got bored, or got so rich they just wanted to retire and hence became dinosaurs. But regardless, you know that his spreadsheet analysis is way better than yours, and you wonder if the old phone number attached to his name works anymore. You wisely jot it down. This chart tells a fascinating story. You can go through it line by line by line. You're currently in 2023, of course, and you're looking back at the trailing 5 years of progress in this company. If you just start with line 1, units at wholesale, well, the numbers are dramatic. Remember that units at wholesale refers to the number of Blade Runner drones that were sold to retailers like Walmart and Target. The drones were then marked up and sold to consumers. The retailers also made a deal with Blade Runner to service broken drones if consumers paid an insurance premium of $100 to cover 3 years' damage. But you ignore that as a trivia point at this point. And it looks like Blade Runner was growing unit volume by 8% a year, and then it really hit the skids and actually declined. And you're thinking, why? Drones are today more popular than ever. Was pricing too high? And you look down a few lines and you see the wholesale price points as declining a bit, 7 to 8% after a few years. But you remember that drones are way cheaper today. For $500, you get an amazing drone. So how is it that these drones are still selling for such a high price? Well, the market moved and the market leader, you're guessing, didn't. Then you look at sales from the website. Well, they doubled from 82 million to 155 million in the same time that the wholesale units were flat at 260 million. What's more interesting is that sales directly off the website on a unit basis actually went up That is, they cut out the middle people and the retailers and just kept all that margin for themselves. Sales off the website were likely way more profitable than the wholesale channel, like selling to the brick and mortar guys. Interesting resource allocation shift. Then you look up the site's traffic on Quantcast, and you note that it is massively trafficked today. In fact, it's one of the top 100 most trafficked sites in America, almost as trafficked as Shmup. Then you go to the Google SEM grid and look up the keywords that the company is buying there. Well, they pay $1 a click for keyword drone. Yeah, expensive, but probably productive. Well, you keep hunting. Upon deeper inspection, overall revenues went from $343 million to $418 million in this time period, but they didn't get there in anything close to a straight line. And you can totally see how the stock cratered in January of 2021 just by looking at the revenues line. And you guessed that at the time, the street believed that the company would grow margins twice as fast as revenues, as the incremental drone didn't cost the company all that much to produce. So revenues went from $343 million to $384 million, then $447. And the street was probably thinking that the next year would be something over $500 million with good margin. Well, instead, the company shrank revenues almost 3%, and instead of the $500 million the street expected, the company printed only $435 million. Ooh, huge miss, especially where it hit earnings. So instead of a company estimated 4 to 5 years later being over $1 billion in revenues, well, that company would be lucky to be half that amount. No wonder the earnings multiple went from 40 times with a stock price in the $120 range to only 12 times with a stock price under $50. You skim through the operating data and jump to the bottom line. You note that after tax, earnings stalled at around $80 million a year, but with cash earnings meaningfully higher than that, like $100 million. So they must be depreciating something a lot. And you wonder if that depreciation is phantom, i.e. the asset will in fact last another century and it's only accounting rules that are forcing the company to depreciate it, or if that depreciation is real, i.e. the company will have to replace whatever asset it is that it's depreciating so heavily. And you note quizzically that the company generated last year almost $5 a share in cash earnings. Well, it apparently started with zero debt and zero cash at the beginning of 2018 in order to accommodate the convenience of this shmup course. So the company's generated almost $500 million of cash in the last 5 years, and you think to yourself, this can't be right. Well, the company has 20 million-ish shares outstanding, with about 460 million divided by 20 equals $23 a share in cash. So if you got rid of the cash part in the market cap at $50 a share, well, the street's only giving about $27 of value to the company for its $4.80-ish in cash earnings this year, which sounds just super cheap. And then your head flashes to wondering about that insurance product that the retailers sold for $100. You're wondering if maybe there was some liability attached to that, which has scared off investors. You're wondering if maybe there was a defeatist thing going on, like with the robotic lawnmower situation, like drones giving people lots of really tight haircuts. So all of these things rattle in your brain as you can't figure out why the stock is so cheap, and then you turn to the latest filings, gadflies, and other street onlookers who try to list semi-accurately who the big shareholders are in various companies. And you look down the latest list and you see Fidelity there, 1.7 million shares, and Capital Research, 1.3, and T. Rowe, 1, and Janus, and the founders have 500,000. Then a long list, long tail of vanilla mutual funds no one's ever heard of. You summer interned in that world as a mutual fund summer analyst, and you know enough about it all to know that mutual fund managers have like 8,000 things going on all the time, and the last thing they want to mess with is a lot of detail work on a would-be dying company which isn't going to move their portfolio's performance in any meaningful way, so they ignore it. So you're wondering aloud if the offer, the right one, came in at $60 a share, $65? Well, you're guessing that a majority of shares would vote yes, and you'd be the proud new owner of a maybe great, maybe dying drone company. Well, the board is also a big consideration here. At the end of the day, shareholders elect board members to then govern the company, more or less. Well, part of governance is deciding whether or not to sell at a given price and set of terms. Well, the board appears to have just 5 members, 2 of whom are founders of the company, 1 who's a friend of the founder, and 2 notionally independent board members who you think are probably not all that independent. So this is a company clearly controlled by the founders, the insiders, and in order for you to be able to buy it, you're going to need to be on board with the board. And that goes for their operational expertise as well, the management, the people who brung this company from zero to something. Yes, they've stumbled relative to Wall Street estimates the last 2 years, but they built this place from scratch. And you estimate that they know somewhere between 1,000 and 10,000 times as much as you will ever know about the drone industry. So you want them all in. And you note with odd sadness for them that today they only own about 2.5% of the company in the 500,000 shares they're listed as having. You wonder if they sold shares along the way or if they were just diluted down with round after round after round of financing. That's 500,000 divided by the 20 plus million shares outstanding. And yeah, that's how we got that 2.5%-ish thing. So yeah, your interest is piqued. And yeah, we're going on to the next video to continue this saga.